Hello, my name is Eric Merritt from HomeSmart in Northeast Mesa, and this is my good friend and Premier Loan Officer, Steve Copas.
Hello, Eric.
Hello.
How are you?
I'm really good.
Good.
And today we're going to talk about how the real estate market is for first-time home buyers, and we have solutions that can help you get under contract. And those of you that are FHA buyers out there, if you are working with another realtor, you will know that it's very hard to get under contract because there's an influx of cash and conventional buyers coming in here, corporations and RITs, real estate investment trusts, buying up these properties that are $275 to $350 because they want to put them in their portfolio for 5 years and rent them out. And unfortunately, that's pushing buyers further out of the city or forcing them to rent, which we don't want that. We want you to become a homeowner so that you can get the equity, not some corporation making those people richer. So we're going to talk about how to go around those ideas. So there's 2 loan products that Steve Copas has, and we're going to talk about how someone can go conventional. So how do we go conventional instead of FHA? What's the minimum credit score someone should use?
Well,
Someone should need, I'm sorry.
that's okay. Technically, the minimum credit score would be 620, okay, to get qualified for a conventional loan. But anything below interest rate's going to be very elevated if you even get approved. Just because you have a 620 doesn't mean you're getting approved. But if you do get approved, you can have an elevated interest rate. Really, to get a good interest rate, it starts at 680.
You have a normal market interest rate.
That's correct. To get a good interest rate, normal market interest rate, 680 credit score. And that's for people really, truly that make less than $62,500 a year. Okay, so Fannie Mae, Freddie Mac both have a program that allows for 3% down, which is below the normal conventional loan minimum down payment of 5%. Yes, and they both have that for people that make less than $62,500 a year. And if you're over a 680 credit score, you get the same credit score that somebody with a 740 credit score has. You know, you get the going rate. Even if you have less than perfect credit. So it's a program to help lower income people make ends meet, give them a chance to get in this market.
Right.
And like you said, listing agents don't want to see FHA qualified buyers making offers on their homes when they've got conventional loan and cash offers. They're just setting those aside. Whether that's fair or not, it's what we're dealing with. And so if we can get you qualified for a conventional loan, that's at least going to be a little stronger when we're out there.
Right.
Shopping, yeah.
And what's the minimum debt to income ratio, or not minimum, I mean maximum debt to income ratio someone should have to get a conventional loan?
For a conventional loan, generally 45% is your maximum. In some cases it goes up to 50 in certain credit profiles and circumstances. Generally the lower down folks are going to get approved up to a 45% debt ratio. And what debt ratio means is just that if you take your total monthly gross income, that's before taxes, your gross income, what percentage are all your debt payments? So that's credit cards, car payments, student loans, those kinds of things.
The monthly revolving.
Yeah, credit cards, that type of thing, including any other homes you might own, and the potential new payment that you're trying to qualify for. If you add all those together in a monthly basis, they can't exceed 45% of your gross monthly income. Okay.
Yep. Yeah. And so we have 2 examples based on a home purchase that's $350,000. So we have one that's conventional on the 3%, one home ready.
Mm-hmm. That's correct. Yes. Yeah. So if you're looking at a $350,000 purchase and you're looking to do an FHA loan, you're going to need 3.5% down. That's $12,250
versus $10,500.
Versus the 3% down conventional at $10,500. You know, if we can get that credit score to 680, and you do make less than $62,500 a year, you have that option. You're going to get the same interest rate pretty much as you get on an FHA, but your mortgage insurance will generally be a little bit cheaper. So all in all, if you put it together a whole payment, and when we do these payments, we're considering a lot of estimates. Property taxes are included in there. It's different on every house. Homeowners insurance is included in there. Obviously, it's different on every house as well. And homeowners association. Some homes have them, some homes don't. Sometimes they're $20, $40. Sometimes we estimated here $80. Maybe that's a little on the high side. But if you look at the out-the-door payment on a 3% down conventional loan with with the going rates, you know, if you're over 680, you're looking at the $1906 a month. That includes an $80 HOA. That's everything.
And property taxes are based on 2,000 a year, so we have 165.
Right. Pretty good estimates in there. Yeah, I think you're going to be pretty close to that. You might get out cheaper than that if there's no homeowners association, or there's a cheaper homeowners association. You know, that same house with the same estimates for taxes and homeowners association, insurance, all those things. On an FHA loan, you got to put, instead of $10,500 down, you got to put $12,250 down. Okay, so $1,700 with a $1,750 more, right? And you end up with a payment of $1,978 because of the increased mortgage insurance that you have on an FHA loan. So you can end up with a better payment on the conventional, less out of pocket, in a way of circumstances, and you have a stronger offer the listing, the seller.
Right. Exactly. So of all the people that you're getting pre-qualified for FHA, how many of those are coming in that are going under contract?
Sadly, very few, which I think is a shame. You know, there's so many people out there that you may be in a situation where it's hard to get anything but an FHA loan. That's all you qualify for. And sadly, it's very difficult for someone like that in this market. You gotta be a little lucky to get some, but I get very few contracts coming back through after I pre-qualify someone for an FHA loan. We can get them conventional, they're much more likely to come through.
Yeah. Wow. So this is a way for you to become a homeowner, build your equity, so these REITs out there and corporations don't keep taking our properties away from us, because you deserve to be a homeowner, and we're looking for solutions to help you become a homeowner. I have 2 new home builds that if it wasn't for Steve, they never would have never would have been shopped into a new build. And so, you know, now they're taking advantage of $50,000-$60,000 in equity, and they haven't even moved in their house yet. So that's all thanks to Steve, really. So in this market, you know, I would say, I don't know what the ratio is of FHA versus conventional cash. It's probably like for every 6 conventional or cash, there's probably 1 FHA that's getting it under contract.
Yeah, probably, yes.
Or worse, I don't know.
Yeah.
But, so we want to thank you for watching our video, and please go ahead and like and subscribe and share our videos, and you'll be notified of future ones as well. And Steve Kopas's information is?
Best way to get a hold of me is always my cell phone. My phone number is 602-525-6940. You can also apply online at my website, www.stevekopas.com. Last name is Copus.
Thank you.
Yep, thank you.